From the first hours of today's trading session, investors are anticipating Jerome Powell's testimony during the economic symposium in Jackson Hole. Judging by the dynamics of currency quotes, market participants are braced for some dismal news. Today, the US dollar index slid below the 93 level. It's likely to be trading at this level for some time. Yesterday, the US unveiled a strong report on durable goods orders, though traders ignored this data. It confirms once again that investors are mainly focused on the upcoming economic symposium. This is why Jerome Powell's speech is highly likely to set the tone for the market. Most experts believe that the regulator will announce a broad review of its monetary policy. In his latest interview, Powell admitted that the Fed might allow inflation to run above 2% in order to compensate for periods of slow growth in consumer prices. Such a change in the monetary policy will put pressure on the US currency. After all, if the inflation is expected to rise higher, the central bank will not raise its interest rate until inflation exceeds the 2% target level and consolidates higher. Traders are also alarmed by reports from the US labor market. The recovery there is quite unstable and uneven. Last week, the number of Americans filing for unemployment benefits rose above 1 million. In today's speech, Jerome Powell is highly likely to justify the decision to raise the inflation target by stable employment growth and a steady unemployment rate. Even versus the yen, the greenback is losing steam. The quote failed to sustain its upward movement. It did not reach the key level of 106.65. Traders prefer playing safe amid market uncertainty, so they opened short deals of the US dollar. However, technical analysis experts think that the US currency may still resume its upward trend if it consolidates above the level of 106.35. Fundamental and technical analysis experts are split over the future trajectory of the AUD-USD pair. Australia's private sector capital expenditure declined less than expected, convincing investors to open long deals on Aussie. So the pair managed to fix above the 72 level, after having broken the 0.7240 level. The next target is 0.7296. But technical analysis experts think that bulls will soon run out of energy and the pair will resume the downward movement. The quote is likely to climb up by 20-30 points, but then it should reverse downwards. When the pair dips below the 0.7182 level and considered there, it will begin its medium-term drop to the target level of 0.6975. However, since the price has already moved significantly away from this level over the past 5 days, the pair is most likely to reach the 0.7075 level. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.